And Jack is going to talk about insider sellers, basically potentially, Jack, fire selling their stocks. Go ahead, Jack, take it away.
Yes, thank you, Travis. And what we're looking at here, here's a picture, young man making a little money on the side, putting in work, and he's shining shoes. And there is a famous quote about this. Now, I've heard this quote attributed to JP Morgan. I'm pretty sure it was Joe Kennedy originally. But as the story goes, one of these guys, whoever it was originally, was having his shoes shined in New York on Wall Street. And while he was having his shoes shined, the boy shining his shoes gave him a stock tip. And as the quote goes, if the shoe shiners are buying stock now, who's left? Who is possibly left to pile into this market to drive it higher? All right. And that was basically his signal that the market is about to crash. And well, 1929 happened shortly after that. So that is setting the table for this information. What we're looking at in this chart right here, this is from the Motley Fool, American adults that own stock. All right. And right now we're at 61% of Americans. This is the latest data as of 2023. Now, I would remind you guys that the stock market has gone up virtually in a straight line since the start of this year. So this number is almost certainly higher now. But as of the end of 2023, 61% of American adults own stock. That's either directly buying them through a brokerage or indirectly in the form of, let's say, mutual funds in a 401k or an IRA. So we are almost at the highs of individual stock ownership in America that we were at during the dot-com bubble, which was 63%, or in the immediate lead up to the global financial crisis, which was 62%. In 2023, we were at 61, and the market has gone straight up since the start of this year. So we're probably at 62, 63, maybe even higher already because people are piling into stocks hand over fist. You can see the same thing in American families that own stocks right now. Slightly different data point. The last chart was adults. Now we're looking at families. Now, the pink line down at the bottom, that's people who directly own a stock, people who call up their broker or log into their brokerage and buy shares directly. And then the purple line is people who own them indirectly, mutual funds, IRAs, that kind of thing. And you can see here for indirect ownership, we're already higher than we were before the dot-com bubble in 2001 here and before the GFC. Now, this data is only as of 2022. So again, this data is almost certainly much higher now as well. And you can see in individual ownership, we're already at the highs that we saw in the lead up to the GFC and the dot-com bubble. And considering the datedness of this data, it is almost surely higher. So the point here with these two charts is the shoe shine boy is giving stock tips again. All right, that's what I'm telling you guys. All right, we're there. So now that we know what the shoe shine boy and the cab driver is doing, what are the big guys doing? What's Joe Kennedy and JP Morgan doing? And so who are the JP Morgans and Joe Kennedys of our time? You're talking your Bill Gates, your Jeff Bezos, your Warren Buffett. So let's just go through some of the anecdotes that I've seen since the start of this year and what the big dogs are doing. And we're going to blow through these. We're not going to spend too much time on each one, but I'm just trying to paint a picture what the little guys are doing and what the big guys are doing. Jeff Bezos, now this one's from back in February, sells over $4 billion of Amazon shares in the past week. Bezos has been piling out of Amazon stock. Now, look, he still owns huge positions. All these guys we're going to talk about, they all have huge positions in their companies. They're selling about as fast as they can without tanking their price. If Jeff Bezos were to come out tomorrow and sell all of his Amazon stock, he would be lighting his own money on fire because he can't sell all of his Amazon stock without crashing the price. It would cause a panic. So these guys are selling about as fast as they can without alerting everybody else that something might be wrong here. Bezos, $4 billion of stock he sold at the beginning of this year. Very conveniently, he's also moving from the West Coast to Florida, ostensibly to spend more time with his girlfriend or his family. And he's also saving several $100 million in tax burdens because Jeff Bezos never actually bought any Amazon stock. He just gave it to himself when he started the company. So that $4 billion is all capital gains. Moving to a state like Florida, he's saving a lot of money in those capital gains taxes. Another famous bigwig who's currently dumping stock is this one, Jamie Dimon, the CEO of JP Morgan. All right, JP Morgan, the guy in the shoe shine story, or one of the rumored guys in the shoe shine story. Fun fact, this is the first time Jamie Dimon has ever sold JP Morgan stock since he took over the company, which more than 10 years ago. He's been CEO there for a long time. Jamie Dimon made $183 million selling JP Morgan stock. Here's how much others have made. Now, again, Dimon still has big positions in JP Morgan. He's not selling all of it, but this is the first time since he took the helm that he's ever sold stock. And by the way, Jamie Dimon has had some pretty powerful sound bites in the press recently. He's been describing the phrase the soft landing, which the mainstream financial press likes to put out there. He's been describing that as a bunch of happy talk. He's been saying all this premature declaration of victory over inflation, that he doesn't think it's as sure a thing. He's worried about inflation coming back. So Jamie Dimon is voting his wallet. He is selling stock, again, while the shoe shine boys pile in. Not just Jamie Dimon and Jeff Bezos. Check out Bill Gates in this one. This is from Benzinga a little earlier this year in May of, actually, this is just a few weeks ago. Bill Gates sells Microsoft and Berkshire Hathaway shares in Q1. Bill Gates is selling Microsoft. Now, this is indirectly. All right. He is selling this through the Bill and Melinda Gates Foundation here. A new 13F filing for the Bill and Melinda Gates Foundation Trust revealed two key changes. They sold Berkshire Hathaway, and they sold Microsoft. Billions of dollars in Microsoft stock being sold by Bill Gates. Now, again, guys, all these shares are rocketing. Retail investors are piling into companies like Microsoft and Amazon because of the AI mania. Well, the guys who own the most stock in those companies are selling it to you, the retail investor, as you're piling in. Take from that information whatever you want. Not just Microsoft, not just Amazon. Mark Zuckerberg sold $428 million of Meta stock in the last 2 months of 2023. Again, small potatoes. Zuckerberg has billions of dollars in Meta stock, but he can't sell billions of dollars in Meta stock, or he will no longer have billions of dollars in Meta stock because it won't be worth that anymore. He's selling it about as fast as he can. Now, a smaller number, but we're kind of talking about the Magnificent Seven stocks here. Even Alphabet or Google CEO Sundar Pichai sold $3.8 million of company stock. Now, these are planned sales. They were pre-announced, so there was no big surprise here. But this is another one of those big AI mania stocks where the CEO is unloading those shares as retail piles in. And then one of the most famous investors, or one of the most famous baby boomer investors, Warren Buffett, at the Oracle of Omaha, he is sitting on $189 billion of cash. Warren Buffett, through his actions, forget what he's saying for a second. Look at what his words are. He has sold more stock and stockpiled more cash than ever before, which means Warren Buffett is more bearish on the stock market than he has ever been at any point in his life. Forget what he's saying and forget, strong and the resilient economy, and don't listen to the doomers. Why did Warren Buffett raise $189 billion? What is he planning to buy? I'll tell you what he's not buying right now is stocks. He's selling them. He's selling them by the billions. Now, the darling of the AI mania, let's talk about this one, NVIDIA. All right, now, NVIDIA, not as alarming as some of the other ones, right? They're not dumping by the billions like we saw with Bezos and Amazon or with Buffett. But the key point here, this isn't market beat. This is tracking insider trades in NVIDIA stock. And in the last 12 months, from NVIDIA's C-suite executives or their directors, there has been 0 buys of stock, but 9 of them are selling stock, a total of about $340 million. Now, I want to put that in context. Jensen Huang is worth about $39 billion or something like that right now because of what NVIDIA stock is. So $340 million, small amount compared to what they actually are sitting on, but none of them are buying. And if you scroll down a little bit here, this is showing the red line shows the stock buys and the green lines show the stock. I'm sorry, the red line shows the stock sales. The green lines show the stock buys going all the way back to the second quarter of 2021. Not a single share of stock has been bought by a single insider at NVIDIA in the last 3 years, 3.5 years. They've all been selling. Well, not all of them have been selling. All of the insider transactions have been sells, no buys. But they are actually buying stock. NVIDIA's insiders are buying stock. They're just doing it with your money, not their money. NVIDIA has a $25 billion stock buyback program that in this article back from August of last year, they referred to it as a head scratcher. So remember, when a company buys back a stock, they're taking their own cash, they're buying those shares and basically destroying them. So NVIDIA's insiders are perfectly willing to buy stock with your money. And when I say your money, you, the retail investor, who by now has probably piled into NVIDIA stock. I'm pretty sure I'm the only one left that hasn't. But they're willing to take your money, the NVIDIA shareholder, and use that to buy stock that they are personally selling and taking. Therefore, they're taking your money through the company. They're willing to sell their shares to you, but they're not willing to buy them. So take from that what you will. Now, there's a couple of other data points I want to talk about with what the insiders and what they're doing. We're seeing a lot of CEO turnover right now. Now, I'm not sure you can extrapolate too much information from CEO turnover, but one thing I can tell you about company executives that I learned in my years in corporate America is these are not the kind of captains that go down with the ship. These are the kind of captains that call the janitor into the captain's stateroom and say, "Congratulations, janitor, you're the new captain of the ship. And now that I'm no longer an officer, I'll be in the lifeboats if you need me." That's the kind of people who run companies in America. They're not go down with the ship kind of captains. So this one, 180 CEOs left their post in March of 2024, and it was the highest quarterly total on record. This is according to Challenger, Gray, and Christmas, this big data analytics firm. Now they're saying 622 CEOs left their roles as chief executive in the first quarter of 2024, the highest on record. This data only goes back to 2017, but you can kind of see here in this chart, 622. The highest number before that was 441 in 2020 in the first quarter. And you may recall the first quarter of 2020, it's kind of a lousy time to be in stocks. Although afterwards it was pretty good. So a lot of CEOs are jumping ship. It's an important trend to keep an eye on. And that's that one. The other thing I would just mention, CEO turnover, it did slow a little bit in April. That last data that I showed you was the March data in the first quarter. So CEOs leaving the company slowed a little bit in April. But one thing that is picking up now is they're talking about founders have left their company. So not just the CEOs, but the founders. And if you scroll down a little bit, 90 leaders exited as founders so far this year, with 16 in April. This is compared to 17 instances of founders leaving their CEO roles through April 1 year prior. All right, so 90 founders quit their jobs versus 17 a year ago. The pandemic and the immediate post-pandemic saw an increase in startup activity as companies grappled with new ways of operating. Successful founders navigated those storms and are now looking for other projects. They're trying to explain why this might be happening. Now, look, the CEOs leaving and the founders leaving, there's two ways you can interpret that. They feel like their work is done and they've been successful and they're ambitious about other projects, or they're cashing out at the top and they're leaving the companies before all the bad things happen. And my money is on the latter. That's what I got for you guys on insider activity. The shoe shiners are buying, the CEOs are selling, and they're quitting. You take from that data what you will.
Well, from one shoe shiner to another, thank you for the story. I think you did well. And I have a question. And I think that, whoops, let me switch this. I apologize. I'm still getting used to this. I have a question, Jack. One of the things that you said kind of hit me, Warren Buffett. A lot of people think that Warren Buffett's a pretty smart guy. He invests his money pretty well. He's gone through many, many cycles before. And you said that Warren Buffett has more cash on hand right now than he has ever had in the history of him having cash on hand. And so can you, Jack, for me, will you explain, and also for the viewers, can you explain maybe some thoughts on what do you think his plans are? Why do you think he's doing that? What is he going to do with that money? Maybe we can give a head start to some of the viewers. They can figure out what to do with their money, or even some caution. But what do you think Warren Buffett is going to do with all that money?
So for Warren Buffett to be sitting on cash, he's saying any asset I might buy with that cash is probably going to be cheaper later on, and therefore I'm going to sit on cash. Right? When you're sitting in cash, you have a carrying cost. The money's being eaten away by inflation. He's probably putting a lot of it in money markets or T-bills, so he's collecting that 5% interest that you can get in T-bills right now. So what Warren Buffett is saying is, I think 5% is probably the best I'm going to do here with this money, parking in T-bills or money markets. And so I'm just going to sit it out. I'm going to wait for better prices. He's saying, I think any stock or any asset I could buy right now is going to be cheaper a year from now or cheaper 6 months from now. He's not putting a timeline out there. I'm, just paraphrasing. But if he thought stocks were going to be going higher, he wouldn't be sitting on $189 billion in cash. He'd be sitting on $189 billion in stock so that he could capture that upward movement.
Okay. Melody?
Yeah. So I guess one thing I think a lot about is, I was a very good, useful idiot when I started in housing. And, something people always said was, we didn't see 2008 coming. But in reality, there were a lot of people that did see it coming. Right. And so, to me, it's obviously looking at the data, what data we have from multiple data sources. But, Jack, do you see this as obviously, a sign of what's actually about to come? That likely, these are the types of signs you need to be looking at, not what mainstream media is telling you.
Yeah, absolutely. Let's face facts. Retail is the last one to the party. The small time investors are always the last ones in. And typically the rug pull happens when everybody is at the party, right? They let everybody in and then the cops show up and the party's over, right? It doesn't break up when just the first few people are in. And right now, retail is piling in. The latest data we have says we've got more retail investors playing in this market than we had immediately, or we have almost as many as we had immediately before the prior big market events. And again, that data is aged and these stocks have only risen in value ever since. So I'm sure that chart has continued to move up. So, retail has never been more bullish than it is right now. And
if I could, a second part. Yeah. Travis. Yeah. And so what do you think, could trigger an event? We know this is an election year. And we know that there's a lot of people who will be voting money in this. What do you think could trigger a correction in the stock market?
So there's a couple of things that could trigger it. And, I want to kind of remind you of like the Smokey the Bear sign. When you see the red sign at the campground, Smokey says fire conditions are very high. You're likely to see a fire. Smokey is not saying the fire is going to start here because of this thing, just that conditions are perfect for a fire. It's hard to predict that idiot that throws a cigarette butt or that kid who drops a glass bottle at just the right angle of the sunlight to kick off the flames. So it's hard to say
$450 million wire in the Archegos debacle,
something like
right?
that. Nobody saw Archegos coming, and that was described as a market accident. Yeah, when risk officers just not doing their jobs. Couple of things could do it. I think a sudden spike in unemployment. My guess is around 4.5% because Jerome Powell has been asked to define what a soft landing means. And at one point he said, I think we can get inflation back down to our 2% target without unemployment going above 4.5%. So right now, higher unemployment is actually sending stocks higher because everybody thinks people losing work means the Fed is going to bring back the easy money and stocks are going to be pumped even higher. But I think if unemployment goes above that 4.5% threshold that Jay Powell put out there, the market might think, oh, crap, it's transitory all over again. The Fed missed it again. And now it doesn't matter that Zerp and Burr are coming back because nobody's going to have jobs. Nobody's going to be able to afford to buy the products that these S&P 500 companies are selling. And so at some point, bad news will become bad news again. I think 4.5% in unemployment is going to be it. And then, of course, you've got commercial real estate. You've got banks that are still stressed, and you've got a mania going on in artificial intelligence. Any one of those suddenly popping or some black swan event that damages those three stories, that could be a trigger as well. There's no shortage of catalysts for a big downward move in the market right now. And it's a very top heavy market.
Jack, I got two questions for you here that I thought would be good, maybe a little bit challenging to what we're saying. And I think that's good for us all. And I know you said Jamie Dimon, he's never sold before, but can you address Christy, who's basically saying Jeff always sells after earnings seasons? I mean, are they just selling because of earnings seasons?
Jeff is Jeff.
Jeff always.
We talking about Jeff Bezos?
Amazon, Amazon Jeff, yeah.
He said Jamie Dimon.
Yes, but my point was what you said though is this is the first time Jamie Dimon has done that.
Yeah, that's never
So it's
happened
contrary to this comment, but could you go into the fact that do you think it's just because of earnings?
No, I don't. A guy doesn't sell hundreds of millions of dollars of stock so much that he has to move to another state for tax benefits because of quarterly earnings. That's not something that happens 4 times a year. All right. Now, there are pre-planned sales that do happen regularly for a lot of executives, and maybe like the Sundar Pichai, the Google CEO, I think is probably, maybe it would apply there. These guys have options that vest, and so there are some. You do typically see some insiders selling around quarterly earnings. That's not necessarily alarming. I could, maybe some of the NVIDIA executives, maybe the Google exec, but like the Gates Foundation, Bezos, Zuckerberg, Diamond, no way, definitely not what's going on there, or Buffett for that matter.
Okay, one more question, and then we'll go to the next story here. This is from Jiwan. What are they buying with these numbers? Purchasing power for the USD is low. Are they buying gold? When downturn comes, per David Hunter, things are going to do well, including commodities and assets. Would you respond to that, Jack?
Well, I can tell you Buffett is not buying anything. Buffett is sitting in cash. Now, as far as what Bezos is doing, we don't know what he's doing. He's a private citizen now, so he doesn't have to report that. Now, a few of them, I think it's the Gates Foundation, has been buying some Chinese stocks like Alibaba and Baidu. So there are some big players are starting to call a bottom in China. Might be a little early in my opinion, but they're starting to position there, buying some Chinese tech. That's geopolitically pretty risky there. Definitely gold and commodities are seeing a surge, although I don't know that it's Diamond and Bezos or Zuckerberg that's doing that. Gates has been buying a lot of farmland, and I can tell you the conspiracy guys have been having a field day with that one. You're seeing a lot more hard assets, I think, cash, farmland. I haven't seen any of these individuals coming out with stories about buying gold, but I'm sure some of that is going on because we're seeing gold and silver are rallying along with copper and a lot of the other metals as well.